Few companies in the Philippines can balance growth and stability quite like SM Investments Corp. At a time when most conglomerates must choose between rewarding shareholders and maintaining a strong financial foundation, SM sets a new standard, sustaining dividend growth, reducing debt, and buying back shares, all from genuine earning strength. The numbers speak for themselves. In 2025, the parent company collected more than 38 billion pesos in dividends from its subsidiaries and affiliates, while distributing just 16 billion pesos to its own shareholders. This is no isolated windfall, but a deliberate cash flow strategy. The surplus did not remain idle. SM retired over 25 billion pesos in long-term debt and repurchased more than 5 billion pesos in company shares, all without stretching its balance sheet. What distinguishes SM is financial discipline. Its dividend payouts are not funded by borrowing or asset sales, but by robust, recurring cash inflows. Over the past 5 years, parent-level dividends have skyrocketed from 5 billion pesos to 16 billion pesos, with a compounded annual growth rate exceeding 32%. In April, SM affirmed this trajectory by raising its dividend by 31% to 17 pesos per share, marking 5 consecutive years of increases. Such durability comes from the quality of the earnings base. 90% of profits come from recurring businesses, retail, banking, and property, providing stable, diversified cash flow in any environment. This balance gives SM the ability to invest for growth while delivering increasing returns to shareholders. As President and CEO Frederick C. Dibuncio explained, reliable cash flows allow for growth, shareholder rewards, and a strong financial position, all at once. The latest earnings reinforce this confidence. For the first quarter of 2026, SM delivered 21.5 billion pesos in consolidated net income, up 7% year-over-year, on 159 billion pesos in revenues. Banking accounted for almost half of net income, property for more than a quarter, with retail and investments rounding out the mix. Even in a soft consumer environment, retail earnings rose by double digits, and portfolio investments delivered new layers of growth. SM's approach to capital remains prudent. With 1.8 trillion pesos in assets and a 30% net debt to 70% equity ratio, the group combines financial flexibility with conservative risk management. That means capital spending, dividend growth, and share buybacks are not competing priorities. They coexist by design. For investors seeking income, the message is clear. SM Investments has crafted a model where growth, dividends, and financial health support each other rather than compete. With its earnings power replenishing capital headroom each year, SM is positioned not just to maintain, but to expand shareholder returns well into the future. Confidence here isn't just warranted, it's earned.